Good morning, traders. My name is Pete, and this is Trading Kitchen. Welcome into this new video. And I've seen so many videos during this time, and there are some titles that really make me laughing. I mean, titles like "I was losing all my money until I found this secret," until I found this indicator, until I discover this smart money trick, what the banks don't want you to know. So something like that. And basically I just want to make my title much more aggressive, like this. But to be honest, I just wonder, where was my switch? Where is my secret? Okay, and the answer is that I have no secrets. And to be honest, my trading is not changed from drastically, okay, from one moment to another. It changed gradually by the time. And after so many stop losses, after blowing lots of prop firm challenges, small accounts, okay, and basically what I really miss was discipline, and a very crucial aspect for me, which is the daily bias. And that's the reason why I want to tell you something more about daily bias. If you not followed, if you don't watched my previous video, my advice is going and watch it now, because basically this will be the part 2 of the first video. So if you didn't watch the first one, probably you're not going to understand this one. But anyway, this basically it's my point, my break-even point from the moment in which I was able to identify the daily bias. Probably I really increase my win profit and my risk reward ratio. But no secret, no secret indicator, no magic trick, no magic candlestick pattern, okay, that drastically change my results. Okay, just practice. So part 2, first of all, let me invite you to join my Discord group. Subscribe this YouTube channel, guys. I really it's really important for me, because what all the things I do for free, and for, I mean, increasing my community. That's what I really like. So just press the thumbs up button, subscribe the channel. Oh, same old story, I know, guys, but it's really important. Follow me on Instagram as well. I don't share so much things, because I really believe that Instagram is rubbish trading. There are so many people that are posting incredible results, and a Lamborghini, all the stuff, but I don't like this kind of stuff. So I try to go gradually away from Trading Kitchen and Trading View. Obviously, I share all my trading ideas on a multi-day perspective with my weekly overview, which I do usually on Monday. Just a little bit focus on this group. I share my intraday and swing ideas, lots of educational content like this, and also other videos that I found on the internet, and for me they are interesting. I share it without any problem. Group mentorship and all my trading journal with backtest, all for free, guys. I don't want your money, my money. What I'm earn from trading, it's enough for me. So this is journal for free. You have all my trades in the total transparent way, and as you can see, this is November. As you can see, I set all my stop losses, all my take profit. This is my win. This is my win profit factor, which is 50 this month, which is high because my standard win profit is 45, and so as you can see, stop losses are part of my daily trading routine. Okay, no excuses, but if you have a risk reward, a consistent risk reward ratio, you can easily, easily not, but you can profit. Okay, so without further ado, part 2 of how to really find the daily bias. Okay, and let me repeat, this for me is the key. Okay, just because a lot of strategies, there are a lot of strategies also that you can apply with counter the main trend. Okay, but if you really identify the daily bias, you can leave your profit running so much more times by knowing what are you doing. Okay, and so this could be very interesting from the profit point of view. So this is today, and the reason by which I opened this trade that I on Nasdaq, we are on Nasdaq here, I opened this trade that I share on this group, and as you can see, the trade is this one, which is currently running. I don't know if you can see the last one. So yes, this one, the last one. When you see this R means running, and as you can see, you have the link, and you can double check. Okay, so the reason by which I opened this trade is very simple. So first of all, 4-hour time frame. Okay, so we now know that on the weekly, if you follow my weekly overview, what I told you is that, well, we are in a clear bullish situation, in a clear bullish trend. Okay, and when I see that this long impulse, okay, I just say this is the resistance, okay, and this is the supply zone. If this supply zone will be broken, we probably are definitely bullish. Okay, so when price reach yesterday the zone, which is very interesting, because on by this zone, from this zone, this long impulse started. So basically this is a good seller dominance, but anyway, when price reaches that zone, I just wait and begin to waiting a possible reversal candlestick pattern, like a bearish on an engulfing pattern on 50 minutes time frame. Anyway, just I was alert mode on. Okay, so this is my template in which I identified the daily bias. So on the first video, what we say, if this is the volume profile of the session, okay, and as you can see, we are increasing, so it's a bullish trend. Okay, if I say that the yesterday, the day before yesterday and today increase, it means that probably I'm going for the next day to looking for some long opportunities and maybe for a manipulation, okay, during the London opening, during US opening. Okay, so what I'm looking for if I want to go long is short manipulation. Okay, so market tends to go short, want us to believe that it's going to be short, and then it push in very strong way, a push on a bullish way. Okay, so basically it seems what it did here. Okay, so grab this liquidity, because this zone ends with liquidity zone, which is this one. Fake breakout, re-enter, and then go short. Okay, so today price opened above this POC. Okay, no, sorry, the day before today, yesterday, open here, make a strong movement. Okay, so the opening is above the value zone of the day before, and make this huge impulse. Okay, broke this trend line, this resistance, which is not resistance but is liquidity. Okay, if you want, we are going to see it. Okay, and is this one. Okay, so huge liquidity that had started this strong impulse, huge liquidity, and then price re-enter inside the zone until the end of session. Okay, how can you read this? Price, it's true. Okay, the microstructure is bullish. Okay, the middle term structure is bullish. Okay, we know the macro structure, so on a daily time frame, is bearish. Okay, but you see clear. Let me remove everything, sorry. No, let me hide drawings. You see that we have this strong candle. Okay, so here bullish buyers enter the market, okay, in a very aggressive way. Okay, and after this liquidity grab. Okay, so yes, it's true, we are bearish on a long-term perspective, but we have so many structure. We have this first structure that had been broken. We have to wait for the price to reach the supply zone, and then something is going to happen on a long-term perspective. On the middle-term perspective, we are bullish. Okay, but on intraday, we are here on the London Open. Okay, and as you can see, the POC, so the value area of Asian session, is quite below the value area of the entire session of entire yesterday session. What does it mean? That probably the value area is going to change. Okay, market did this imbalance, okay, the strong movement in which probably there are not volumes inside here. Okay, obviously if you have a footprint, you can easily analyze all the order flow. Okay, but what I suppose here, as you can see, this is no volume. Okay, no volume zone. So what I suppose that price will probably react the zone, okay, with this demand, okay, and keep on going short, because we are inside a very strong supply zone. Okay, and basically this is what price did. Okay, so as I saw on the 50 minutes time frame, sorry, this structure that had been broken from this candle, I just move on 5-minute time frame. This is basically my intraday strategy. Okay, this is my intraday checklist. So 50 minutes time frame. On 50 minutes time frame, I just want to see a breakout structure. I just want to see a strong aggression by the sellers, for this instance, by my side, okay, in my favor. And then I switch on 5-minute time frame to looking for some good zones to enter. And what I try to highlight the fair value gaps. Okay, this is an ICT strategy, and well, this I call it the breakout strategy, because it's always break the structure. Okay, I know it's not original, but if you see my all my trading journal for the last 2 years, 1 year and a half, all the entries on intraday perspective that I made are all with almost all with this strategy. Okay, anyway, just wait for a fair value gap, not the first one but the second one, just for the simple reason the first one is usually my stop loss. Okay, so like here. Okay, so this is the second fair value gap that I saw. So when price reacted and re-enter inside the zone or the fair value gap, so like this, I just wait a clear engulfing candle on 1 minute time frame. Obviously, the 1 minute, this trigger, for this trigger I use footprint chart. I don't use trading view. Okay, but also in trading view is quite good to see it using volumes. Okay, so like here you see this strong volumes that basically broke the structure, and also this one you see the strong engulfing, strong volume candle. Okay, and yeah, and so I open my trade. Okay, right here, stop loss just above the fair value gap, and yeah, and you know how it's going. I was a little bit worried because no, but I mean this dotted line, yellow line, is yesterday is a yesterday low. Okay, and basically most of the times the yesterday levels are, for this strategy, probably the more powerful level that you can use. Okay, together with Asian session high and Asian session low. So I was a little bit worried about this this level, because I thought that price could probably react, but hopefully I'm going to hit my my TP, and so now I probably move my entry here. Okay, just below this high with this green candle, but it's going to take my TP right by now. So I'm pretty much happy about that. Anyway, so the last thing I want to tell you is the Vwap. Okay, this is the only one of the very probably the most powerful indicator that you can use, for a simple reason. First of all, what's Vwap? I know there are so many videos on YouTube that you can watch, so I don't want to explain you what Vwap, the Vwap is, because I'm not probably the best to do it. But I'm just reading the volume, the Vwap. So is volume weighted average price is a measurement that shows the average price of a security, of an instrument, a trading instrument, adjusted for its volume. It is calculated during a specific trading session by taking the total dollar value of trading in the security, so in the trading tool instrument, and dividing it by the volume of trades. Okay, this is what the definition in Investopedia. But basically, what's Vwap is probably is the only indicator that put together price, time, and volume. Okay, and for that reason is one of the two indicators, probably, because the other one that I know is cumulative delta volume. So is one of the a few indicators that professional traders do use. For the reason that I told you before, because put together volume with time and price. Okay, and if you think about that, it's something incredible. Okay, just because volume are, so contracts are the the most important thing that professional traders do see. Okay, with footprint chart and all the stuff. Anyway, how to use Vwap? I know that so many professional traders use the Vwap as retail traders, but it's not right what I tell you. But I know there are so many strategies that use moving average. Okay, so when a price cross and retest the moving average, okay, or the crosses of the fast moving average with the slow moving average. Anyway, professional traders do use Vwap as retail traders use moving average. Okay, so basically when price go and cross the Vwap, retest it, okay, and follow the trend. This is not my way to use it, because to be honest, I do not use Vwap for triggering, but I just use it for a confirmation what I suppose to do. I mean, a confirmation for a trend, basically, okay, for the daily bias. That the reason why is on my bias intraday template in TradingView, which is my platform that I use only to analyze and for intraday trades. Anyway, if you set it with 2 standard deviations, and these are my settings, but are very easy settings, so I only use 1, 3 and 5, okay, standard deviation, and so is 1, 2 and 3, okay, it's not complicated. I use a Vwap for 2 reasons. The first one, standard deviation, okay. When I see price moving outside the standard deviation, okay. When I see price moving outside the standard deviation, basically the second one, counter my idea of direction. So like today, I saw price moving outside on a bullish wave when I have to go bearish, okay. So as price do that, re-enter and breaks the structure here, this is for me, and without doing a higher high, for example, this is for me is yeah, it's inside obviously inside the zone with, okay, and grabbing this liquidity. So trading, guys, for me trading, so going back to the first question on the titles that I found on YouTube, I was poor until I found this secret. And basically the main secret for me, which is not a secret but is confluences, okay. If you have so many confluences, if you have so many backtested data that tells you that you are right, okay, I am so much more confident to enter the trade, okay, like in this for this instance, okay. So I just want to be clear about that. Confluences, so we have liquidity grabbing, supply zone, Vwap, and breakout structure. Yeah, we are bearish. Obviously the bias is in our by our side, just because this is the liquidity grab. This one is the liquidity grab of the huge demand on the 4-hour time frame, okay. The second thing and the last thing that I use, the second thing that I want to tell you about Vwap, sorry, just just watching my trades. I don't know if stopping the trade because we are around, we are below the yesterday lows. So let me move an alert just here. Okay. I don't want to miss this profit. Anyway, the last thing that I want to tell you is how to use Vwap. So the first one, look at the external standard deviation, and the second one is just follow the trend. I mean, if Vwap, so if volumes tells you that we are long, like here, okay, look at the inclination. Basically look at the inclination of the Vwap. So like here, the inclination was clearly bullish. There is no reason by which you have to go short here. Okay, I don't know, but probably traders on the supply, as they saw this engulfing here, probably they open a short position. But to be honest, the Vwap doesn't lie. If the inclination was clearly bullish, there is a reason for us to go bearish. Okay. And so after this movement in which Vwap tends to go bearish, and then now just horizontal, just flat like this, okay, it means there is a retracement. Okay, so what does it mean? It means that probably it's going like this. Okay, so if in this situation, if my Vwap was like this, I would never enter a short. But the Vwap is this after doing that thing. Okay, sorry, so many drawings, I know. So this is the Vwap of the last 2 days. Okay, okay, I'm here. Okay, if price follow it, no, if Vwap follow it, the price, okay, and he, after the strong movement, after the strong inclination, made another inclination on the opposite way, sideways here. Okay, so everything is good for me to go bearish. Okay, everything is lined up. Okay, so just take a look to the inclination of Vwap. If like this, no sell. If like this, no buy. Okay, if there is sideways, it means something is going to happen. Okay, like moving average. But the Vwap, use it with footprint and with a volumetrical platform, is so much more powerful than moving average. Okay, so guys, that's pretty much it. I hope you like this video. Let me know what you think about using the comment section below. Subscribe the channel, please do it, don't be afraid. Press the thumbs up button and let me know what you think about. Yeah, see you in the next video. Thank you very much, guys.